I think the easiest trait is not a crisp answer. Like when you typically ask a simple question and you get a complex answer, I feel like that's just the starting ground of a founder who doesn't know what he's doing. Like great founders typically respond very short, clear to the point, and answers that just give you clarity of thought in not just typically the question, but even maybe around it. So you have better follow-on questions. Typically, average founders will take you for a ride in a conversation, but they will not answer what you really asked in the first place.
So this was a special one. We had Apaksh Gupta of One Impression. One Impression is helping over 250 enterprises and fast growing startups drive influencer led campaigns. Apaksh is also a prolific angel investor. He's done about 60 plus investments so far. In this pod, we covered areas like what drove him into angel investing, what's his investing process like, what was his first angel investment, how does he evaluate founders, stories behind few of his big wins and few misses. We also got to know him outside of work. If money and attention are not needed anymore, what would he work on? What's his relationship with money, and who is he outside of work? I had a lot of fun doing this. I learned a lot, and I'm hoping that you guys will also get to learn a lot from this conversation. All right, my man. I am super excited to have Apaksh Gupta on 1947 Operators Podcast. Apaksh, welcome to the show.
Thank you, Shiva. Thank you so much for having me today. Super,
You're
super
looking good,
excited
man.
to be doing this one. No, you as well. I think you're one of the fittest looking guys I know in the VC space. So kudos to you.
Dang, dang. Cool. We'll get going. Let's start by you telling us what drew you into angel investing. What was your first angel investment?
Okay, that's a interesting question. So, I actually got into angel investing because of a very dear friend of mine. His name is Venus. He runs a company called Apakh. He was one of the earliest angel investors in my company, but also a very dear friend. I think because we were growing so significantly in the creator economy, he could see a lot of synergy for me to invest and bring that knowledge to a few companies. So he started sort of pulling me into it a little bit. I think, given that we were a profitable company and had a decent corpus of our own, we thought maybe we should do it. So I think there was a lot of hesitance in the early days. Like I didn't think so because we had literally earned our money from profits and no other way. There was a lot of thought into should we be writing checks like this or not. So the first check was like a really small one. It was like a lakh rupee in a company called Gyanistan. It's really like it's been a while. I We actually exited the company maybe with a 3x, but we never really expected a check back from the company back in the day because we were really trying to just enter and take early baby steps into the world of angel investing. But I think post the first three, four, five investments, the number very quickly grew from like a lakh rupee to a 10 lakh rupee. But yeah, I think that was the first check. This was during COVID. This was 2020 that when I did my first check.
Got it. And fast forward to today in 2023, I think you've done over 60 plus investments. And Apaksh, what's your investing process like? Meaning, now you've been doing it for some time. How do you source deals? How do you evaluate founders? And how do you make up your mind on what companies to invest in and what not?
Yeah, so sourcing actually happens because of in three big ways, I would say. In fact, two. One is because a lot of early stage companies would reach out to One Impression for their influencer marketing. I would say at least until last year, I was very actively part of the sales process as well. So I would talk to a lot of early stage companies thereon, and like if I would really like what the company and the founders were doing, I would reach out to them and say, "Hey, have you raised capital? What's your plan?" And more often than not, I think most founders are always raising capital. So there would be a round that was either closing or getting started. And I typically try and enter into the round. And because of One Impression value that most of these founders would already understand, given that they reached out to us as a platform, I would typically try to sort of bring that lens of creator value that we could add for them and get into the deal. The other way a lot of deals actually have come to me is because we've built a huge credibility as founders in the creator space. So a lot of VCs, and I think I know at least about 60-70% of most of the funds, or somebody at most of the key funds in India. So
Mhm.
anytime they're evaluating a deal where there is a creator angle, they would reach out to us to evaluate the deal or look into the deal or help the founders. And we would typically then, just chat with the founders, and if you'd like it, tag along in the deal. The third way is because I also like, all of the angel checks are typically with a lot of other angels. So we just share a lot of deals with each other whenever we're doing, because I think most angels just don't like love to go as groups. One, it gets you better deals. Two, the surety of the deal actually becoming a success becomes significantly higher when like a lot of key people are invested in a deal. So I think these are the three key ways for me to source deals. I I think one of the key things I feel is like sourcing is half the battle in angel investing or investing in general. Like if you can just get access to best deals uh, that are happening, you can make like insane amounts of money. And I feel like most investors aren't able to get access to deals at the right time, and great deals never really fly around in the market. uh, I think on the other question that you asked me from a thesis perspective as to what do we look for, there are three key things that we look for. One is obviously founder pedigree. And founder pedigree to me doesn't mean IIT or IIMs, etc., etc. What it just means is somebody uh, who's done something incredible in wherever they come from. It could be a great job, it could be a great, it could be a role within a company that they were pursuing, or somebody who's just been failing consistently is also great. Like we don't mind. In fact, if you failed a lot and you're still at it, the chances that we'll write a check for me is like considerably higher, because I know that this person would have known a lot of things not to do. So the chances he'll make it and he's still hustling, is he or she is still
Mhm.
hustling, is great. Uh, so I think founder pedigree and clarity of thought is a like must, and
Yeah.
most deals get segregated at just founder quality. And I think a lot of people keep asking what founder pedigree means. Like, is it great background? But I just feel like when you chat for 15 minutes with somebody, irrespective of not knowing their backgrounds at all, uh, when founders respond and the way they respond and the humility or clarity that comes through just tells you whether these are the people you want to invest in or not. The second piece that really helps is industry understanding. So there are spaces like creator economy, SaaS, deep tech, D2C that I really understand because of different reasons that I've interacted with the spaces. But I wouldn't understand a fintech or a net that well. So in spaces like these, even if the founder is great, if I'm writing a check, it's typically a tag along with a friend who understands the space, as opposed to me really trying to take a bet on the space. But the spaces I understand, I'm pretty actively leading and getting my group of people together in it. And the third, I feel, which is also really important, is how the round is structured. Uh, which means that I've seen most angels typically end up making money on most deals by just the virtue of fact that you enter early. Because if you enter early, even if just a few deals who go right will make you enough to just cover for all the failures that you've done. But if you're going at a high price, the multiples aren't enough for you to cover for all typically your mistakes. So I try to go between a 2 to 5 million ideally,
Mhm.
sometimes between 5 to 10 million, but a post 10 million is super rare. A 2 to 5 is a sweet spot, which looks like the best. uh, I think another thing that we do pass a lot of deals on is how the cap table is structured. We have seen a lot of time, everything looks great, the founders look great, industry looks great, the round construct is great, and then you talk to the founder on the cap table, you'd realize that 45% of the equity is already gone, and by the time they're
Mhm.
raising at 5 million. So you can see there's no chance that the outcome of this company is a 200, 500 million or $1 billion, largely because there will be no founder equity left by the time they're raising more capital. So we do try to ensure that the cap tables are more founder favored
Yeah.
early stage, because that means you invested long term in it. So I think these are just a couple of things that we keep in mind.
So, founders, if you are persistent and you have clarity of thought, do reach out to Apaksh. He would love that. But Apaksh, what are the traits? of a mediocre founder when you're evaluating somebody?
Lots of them actually. I think the easiest trait is not a crisp answer. Like when you typically ask a simple question and you get a complex answer, I feel like that's just the starting ground of a founder who doesn't know what he's doing. Like great founders typically respond very short, clear to the point, and answers that just give you clarity of thought in not just typically the question, but even maybe around it. So you have better follow-on questions. Typically, average founders will take you for a ride in a conversation, but they will not answer what you really asked in the first place. Uh, I think uh, the other trait that I've seen in average founders is just stumbling upon a lot in their ideas or in the way the same vision has. Like in a 30-minute conversation, you'll see like their vision would have evolved three times or even 30 times sometimes. So, uh, I think great founders, irrespective of whether you like, I think the one thing I've seen about great founders is no matter who you speak to in the community, whoever has spoken to them, their one or two traits, whichever are outstanding about them, whether it's product, whether it's engineering, whether it's the impact, whether it's just their ability to raise capital, something about them stands out consistently with everyone they've met. Everybody would agree to a common trait of a great founder, and I think that's just that just like you could see it through when you speak to a founder. Average founders will just be going around and not really answering what you're asking.
Got it. And Apaksh, for you, it was more of like, you got pulled in by a friend to angel invest. And then, of course, later on, you have built a brand around creator economy. Even VCs would reach out to you for your advice on the deals that they're looking at. So, net, you've built a brand, meaning, you do have the ability to get into the deals that you want to get in. But at the same time, let's say if you were starting up again to get into startup investing, how would you advise somebody to go about it? How to kind of like again build a brand and go through the entire journey that you've been through?
So, Shiva, I think, this is one of the things I keep thinking about personally as well. Like, what worked for me and what would have, what can I do better to accelerate my journey? But I just keep feeling the one simple answer is building a brand is not a short term process. Technically speaking, it's been about 7 years since I've been in the startup ecosystem. Like when I met the first VC of my life, it was maybe about 7 years ago. Guy called Naveen. Uh, until 2 to 3 years, it wasn't that I knew a lot of people or a lot of VCs would introduce me to their networks or even investors would respond to me. Or it wasn't easy to get to anybody. I'd maybe write a cold email or a cold LinkedIn, but might not get a response at all. But I think the thing that did work for me was my credibility from one impression. So when one impression started to grow, uh, one guy introduced to another introduced to another, and then these old people, all the people who had met in the first 3 years, who weren't maybe where I didn't have the credibility back in the day, started seeing the hustle and consistent, persistent output of that hustle that was coming out. They could see that this guy is not here for maybe a year or 2 years or a quick buck. He's here to stay. He's on it. He's at it, and he's also growing now. And everybody they would meet who might or might not know about me would see that he's consistently speaking the same language since the 5 years of what he wanted to achieve with it. So then they start introducing you to people they would not introduce you to otherwise, saying, hey, this is a great guy, I've known him for 2 years, 3 years, 4 years, I think you should definitely meet. And that credibility is obviously built over a course of time. So I think that's one part of how brand is built. And for me, that brand acceleration happened in the last 2 years significantly because I sort of knew every founder in the country. Like it was easy to access anyone at all who you wanted to, and it would typically be an introduction from another great person. So it's just easy. Uh, but it looks like it happened in 2 years, but it's actually a process of seven.
Yeah.
Uh, and the other part I think, which is in terms of angel investing, is I think uh, one, getting the first good deals right, first few good deals right. I think in my case that happened because I'm an operator. As an operator, it was really easy when I spoke to a founder to see, or maybe it seems easy to me. I keep saying this when I talk to other angels, that as an operator, some things just come to you intuitively that this seems like a great person or a deal. Doesn't this does the other deal, it's just not working out for me. Somehow I can see that this is not the one. And more often than not, surprisingly, we've been right on many deals. Like I've had at least about 8 deals that have gone over 30x, which is, I think, which is enough to cover for at least 100 to 150 mistakes, if not more, and with significant checks. So, which means that I feel the first few good deals set the ground for the other good founders to come to you, because they could see that you identified good deals early. And the VCs would also start to see that you're on cap tables very early that are actually growing. So the community starts to notice. Uh, and maybe the way somebody else could build that brand is really friendships. I feel like people don't value them enough sometimes, but I feel relationships can get you far beyond many other things can, because like I can tell you I've got into great deals only because of relationships that I share with either their investor or with the founder or with somebody they're close to, as opposed to bringing just pure strategic value. Because in the market today, there are just too many people who are offering strategic great value all the time. So it's very difficult for a founder to really make a decision on whether you are the one who's going to change my curve. And I think word of mouth just comes in really handy at this point in time. So yeah, my advice is just build great relationships with great people. If you don't know anyone, maybe events is a great place to start. When you're a familiar face on too many events in the early days, people start to notice and become friends. That's how, at least that happened for me in the early days. Reach out to a lot of people on LinkedIn. Even if some will respond and you meet some, that's a good start. And yeah, it's a time taking process. And if you work in a company, you report to a CEO or somebody who's an angel investor, it's a good place for you to start tagging along with them. If you could request them, I've seen like lots of people within companies tagging with their founders in great deals. So I think that's another way people could do it.
Love it. Play the long term game, build the credibility, somehow get into the great deals early on. That will help you get into the other good deals, and then just be a good person. Apaksh, would love for you to maybe talk about few of your biggest wins and some misses where you had access to those companies, but for some reason you didn't end up investing, but they ended up doing really good later on. And what were the learnings from that?
Yeah, so I'll talk about the misses first. I think the biggest misses have been my dearest friend. So I think I've been really, I think I spoke to you about it once. I don't remember, but I think my stupidest losses have been two or three of my really, really close friends. One of them, who actually he never really technically reached out to me for an investment. He's an incredible founder. He's exited before, would have easily raised like over a night a few $1 million. So my very close friend Pavan, he's literally, I've seen him exit. He was also one of my first angels. Yeah, I've seen him restart like a new company, Fashionza. I've seen him build it into like a massive multi-$100 million giant. And
Yeah.
I've been having coffee all throughout with him. And I didn't think so. I just should have. Uh, I think I should have had this conversation of writing a check, but somehow over our coffees and conversation, this is one conversation I miss. So it's a huge miss for me that I personally keep thinking about. Uh, the other one is again a very very dear friend of mine, Shelly. She's built. I mean, I like to think of it this way, that I've maybe played a very minor role in pushing her into the startup ecosystem, and she started a great company called Global Fair. I have seen her start. I've seen her talk to me in the very early days, sit with me, plan, discuss. Uh, to now build, being one of she's now invested in by Lightspeed, and I think even by Scott Scheffler at Tiger, etc., etc. So she's raised capital from amazing people. They have huge
Mhm.
revenues. She raised, like we spoke about in like writing a check in the earliest of days, like when she started. And I think I was stupid enough again not to have written a check. I think my thesis back then was more that let's not exchange money with friends. But I've learned the opposite over a course of time, that the best people to invest money are your friends. So now, if a friend is starting up, I typically would just write a check.
Got it. And let's talk about some of your winners. By the way, the biggest learning is yes, always be investing in friends.
Yeah, yeah. No, I agree. I think if if you've over the course of your life, if these are the few people you've sort of filtered out to be your friends, then I think not just your time, you could also invest your money. I've seen it time and again that these are the people who actually give you the best returns in life. So I think that was a myth. On the winners, I think I've had a few. One of the interesting winners is Riggy. Riggy's, while I can't talk about how much, but Riggy's been a significant multiplier for me from when I started. It's a creator economy company. I went in early with Sequoia and Axel and Stellaris. The last round that they had announced was a Series A at 10 million, so they've grown significantly from there. I went in at a at almost like a $5 million valuation, so it's been a good growth. Uh, the other one that's been great for me is a company called One Code. This one I remember because this was the first company I took a very strong stance for in amongst my friends, saying that I'm very pro this company. I think we should write a significant check. This was a time they were raising at like below 10 crores, 15 crores at that time. And I wanted to put a significant check, but I think outside of me, most of my friends somehow didn't see the value. So I also reduced my check size, maybe influenced by everybody else. But I still went in because of the conviction that I had in the company. And yeah, I think they've raised like significant capital again by some of the best investors in the world, including I think General Atlantic, etc. They've done a huge, I think somewhere between 13 to $15 million Series A. Then again, another company that worked well for me was Ilu Ilu. This is a couple of friends who collectively reached out to the founders very early. Again, the reason we did it, in incredible founder pedigree, very senior role at Flipkart, ran a huge business, very good clarity of thought. When he started, was still a bit different than what they are today. But I think they've done a great job. Raised again very similar path to a One Code. They've raised about 13 to 15 million at about 60, 70 million. So they've done a great job. So yeah, I think I've had a few such interesting wins. Another one in the D2C space has been Bellora. Again, went in the first round. They've grown significantly from there. So bunch of companies like this.
And so many learnings here. Apaksh, if there's one thing that you know now you wish you had known earlier, what's something about investing?
Wow, that's an interesting question. Uh, I think the one thing I've learned now that I didn't know back then was that if you're actually doing it, and I think it's a difficult one to really follow, but I wish I could. In the early days, when I did feel conviction for a company, and I think I had the capital to invest, I would still not take that risk as an entrepreneur with a significant enough check for those returns to be significant enough for you over a course of time. And you don't really find great deals every day. So when you find a deal with a great conviction, I think it's a you should 100% take a significant check, because as somebody who's taking risk in a startup anyway, it's fine if you're taking just a little bit more, rather than three companies you could be taking a bigger risk on one. If you invest in the way I have been, which is in like 60 companies plus over 2 years, so I would rather do 40 companies and just larger checks in 40 now. So I think in the early days, in the first year, my check sizes used to be much smaller, and some of the places where I thought I would be right and I was actually right, I would have had significantly higher returns had I just taken those leaps of faith. So I think, yeah, so if people are starting up and they do feel they have the capital to invest, and you find a deal where you have a huge conviction, so I feel it's a good idea to like go with a significant check. That significant could also mean 5 lakhs instead of 2, because when you multiply it by 30 or 40, that number really changes a lot.
Yeah, I can see that in your eyes.
Yeah. Yeah.
Cool. With that, Apaksh, will move into our final part. My co-pilot Alfonso in the back. I think you'll be able to see him now.
Yes, I see
He's
him.
going to take over,
All right.
and he's asking if money and attention are not needed anymore. You've got both of them. What would you work on, Apaksh?
If money and attention are not required at all. I think I keep saying this a lot. I actually keep telling I keep talking about this a lot to some of my close friends. Sometimes not even close friends, but like the VC community. I remember having a dinner with one of the founding partners of this $600 million fund. And I was just telling them the day, uh, if that day comes and if I were not to be running one impression and I've made my money in life, I think there are three problems I'm really excited about solving. The first one is a more easier one, which I talk about, and it's pollution. I just feel that the world could be a more nicer place to live in. Delhi could be pollution free, but the whole world could be pollution free. I just feel maybe no crazy entrepreneurs really at it. The second one I is a bit more wilder. I feel like I people are solving aging, but I'm really excited about solving aging as a problem. I know there's a lot of research happening on the subject, and I feel it's a problem I'm really excited about. And the third one is a problem I feel I get laughed at most of the time. So it's a bit wild as a thought. I don't know if it's even possible, but I'm really excited thinking about if we could solve for teleportation. So I keep saying this is the order of things I would solve for: pollution and then aging and teleportation. But like things that really have a huge impact on human life, then say solving for a fintech problem, which might have an impact, but it's just not world changing in my opinion, and a lot of people could do it. So I would want to go for problems that a lot of people could not or might not be solving.
Got it. And Apaksh, what's your relationship with money?
Yeah, so it's a great question. I actually think about this a lot and how my life has changed. So it's interesting that when I started my career, even until I was 25, I was still mostly taking money from my family. So it was until 5 years ago, I was still like my dad was technically feeding me. Uh, and this was maybe 3 4 years into outside after graduation and me still hustling and figuring out my way. uh, and I've seen life change post that since I started to grow. I think money is really really about like one, freedom of thought. I think whenever there is a barrier in my thought, I always keep thinking about it. Is it money that made me have a barrier? It could be from being with a friend, meeting somebody. Like, is it money that stops you from doing whatever you've wanted to do in this particular point in time? So I think it's one really about freedom of thought. uh, Two, I think just quality of life. Like, I don't really splurge money on things that don't increase quality of life, in my opinion. But I would spend crazy amounts of money on vacations or travel or just good food. Like, I would spend every day on great food. I feel like uh, great food should be experienced, and I would spend on it. But I would maybe not spend on a crazy electronics accessory, because if I don't need it, I will not spend on it. Uh, so yeah, so money to me is one about freedom, one about being able to experience the best version of planet Earth. So I try to do it for myself and for my family both, and all my people, close friends around me. And I think that's how. And money is also a great tool to also enable other people who could do the same for either themselves or people around them. So I also try to use money as a tool to sort of give them that tool and that power to feel more free and experience the world in a better way.
Love it. Love it, Apaksh. And, of course, so we know you because of one impression, operator, investor. And I've known you mostly because, we've been hanging out at Quorum. But what do your friends know you for? Who are you outside of work? What do you do on the weekends?
Okay. Yeah. So this is again. I think my friends know me for very different traits than my work. Actually, work is like a layer on which you do build these friendships, because why you meet certain people and you connect with them and you become friends. But I think over and outside of it, I love to party. I throw at least 4 to 5 parties a year. There is a customary Christmas party that I host every year, and I call all the people in the year who've contributed in my life, close friends, people from work, wherever, who've contributed to my life every year. And it's also a way to just get them all together and say, hey, I feel this is a great bunch of people I've found in my life in this year, so why don't you all just hang out and maybe meet new people. So I do that, but I love to throw parties. I think I go out a lot on weekends. I You would find me at a I think nice bar on a weekend. I'm also deeply into working out, so I work out a lot. I have you know this, I think, but I have an insane workout, and I try not to miss my workout for anything at all, even like an investor conversation. It's a quick 35-minute workout, but I think it's enough to keep me, like, it makes me feel really really incredible. So I try not to miss my workout even if I'm traveling. I train with my trainer, so I do recommend. I've gotten a lot of friends into working out with my trainer or another trainer because I think it really works out. And yeah, so, and I'm a foodie. I love to eat interesting. I'm always hungry, so you can always see me eating every 2 hours. So I love to eat, I love to work out, I love to travel, but most importantly, I love to party a lot. I think I'm known as a host amongst most of my friends.
We are yet to get a workout session together in. I think we should do that soon. And when's the next party, by the way?
Oh, you'll get the invite very soon. It's actually being planned.
All right. I'll push out the episode accordingly. If I get an invite, then only it goes out.
You'll get the invite. I need this episode to go out.
No, Apaksh, thanks a lot for doing it, man. I had so much fun.